Hello, savvy investors. Welcome back to our channel. Today, we have an exciting topic that's crucial for anyone looking to secure their financial future. 10 tips for investing wisely. Whether you're a seasoned investor or just starting, these tips will guide you towards making informed decisions and building lasting wealth. Number 1. Understanding investment goals. Navigating the realm of wise investing necessitates a profound comprehension of one's financial objectives. The journey involves a nuanced identification of both short-term and long-term goals, laying the groundwork for precisely aligning investment strategies. This strategic alignment, comparable to a financial compass, not only imparts direction, but also guarantees that each investment plays a significant role in the overarching financial plan. It serves as a blueprint for informed decision-making, steering the course towards financial aspirations. In essence, unravel the tapestry of your investment journey by weaving threads of intentionality and foresight into the fabric of your financial goals. Number 2. Risk assessment. Embarking on the path of prudent investing requires a meticulous exploration of personal risk tolerance. This goes beyond a superficial assessment, delving into the intricate balance between embracing risk and anticipating potential returns. In navigating this delicate equilibrium, investors can craft an investment approach that aligns with their comfort level while still striving to fulfill their financial aspirations. Understanding one's risk appetite is akin to fine-tuning a musical instrument. It requires precision to strike the right chords. By doing so, individuals can better navigate market fluctuations and make informed decisions. This nuanced risk assessment becomes the cornerstone for building a resilient investment strategy, providing a roadmap that acknowledges both the pursuit of financial goals and the inherent uncertainties of the market. Number 3. Diversification strategies. Diversification, often equated to the age-old adage of not putting all one's eggs in a single basket, stands as a foundational principle in prudent investing. A well-constructed portfolio, diversified across various asset classes, functions as a resilient shield against the unpredictable nature of financial markets. This discussion aims not only to emphasize the critical role of diversification, but also to offer practical insights into the art of strategically spreading investments. By spreading risk across different sectors or types of assets, investors can mitigate the impact of adverse market conditions on their overall portfolio. Number 4. Research and due diligence. Successful investors are anchored in a commitment to extensive research. Before venturing into the complex world of investments, individuals must undertake thorough research and due diligence. The importance of reliable sources for market analysis cannot be overstated, serving as the foundation for well-informed and calculated investment decisions. This meticulous approach is akin to laying a sturdy groundwork, ensuring that the choices made are based on a deep understanding of market dynamics, potential risks, and growth opportunities. By leveraging credible information, investors navigate the intricate landscape with confidence, enhancing their ability to spot trends, identify value, and ultimately make strategic investment moves that align with their financial goals. Number 5. Keeping emotions in check. Navigating the journey of investing is inherently emotional, characterized by highs and lows. Recognizing and managing these emotional fluctuations is pivotal for investor success. This discussion delves into the psychological intricacies of investment decisions, offering readers tangible techniques to prevent emotional turbulence from derailing their financial goals. Just as a steady hand guides a ship through stormy seas, mastering emotional resilience allows investors to stay focused on their long-term objectives, despite market volatility. Number 6. Staying informed about market trends. In the dynamic realm of finance, knowledge stands as the most potent tool. Remaining abreast of market trends, economic shifts, and financial news is not merely a good practice. It is a strategic imperative. This discussion will explore the active role that staying informed plays in empowering investors to make timely and well-calculated decisions. Just as a navigator relies on current maps to navigate uncharted waters, investors benefit from real-time information to navigate the uncertainties of the market. By understanding the pulse of the financial landscape, Individuals can seize opportunities, mitigate risks, and adapt their strategies in response to evolving market conditions, ultimately enhancing their ability to make informed and strategic investment decisions. Number 7. Long-term perspective. The hallmark of wise investors lies in their capacity to embrace a patient, long-term perspective. Patience, often extolled as a virtue, assumes a central role in the realm of investing. This discussion will delve into the numerous benefits of adopting a long-term approach, drawing insights from the experiences of successful investors who attribute their gains to a steadfast commitment to enduring financial goals. Like tending to a carefully cultivated garden, a long-term perspective allows investments to grow and flourish over time. By resisting the allure of short-term market fluctuations and focusing on the bigger picture, investors can ride out volatility, compound their gains, and achieve sustained financial success. Number 8. Regularly reviewing investments. Within the dynamic and ever-shifting landscape of financial markets, what proved effective yesterday may falter tomorrow. Regular reviews of one's investment portfolio become imperative, guaranteeing that each component harmonizes with financial goals and allowing for adjustments based on changing market conditions. This discussion underscores the importance of staying vigilant in the face of evolving financial landscapes. Much like a skilled gardener tends to a garden, investors benefit from a proactive approach, routinely assessing the health of their investments and pruning or cultivating as needed. By embracing this iterative process, individuals enhance their capacity to respond to market dynamics, mitigate risks, and optimize their portfolios for continued alignment with their evolving financial objectives. Number 9. Utilizing tax-efficient strategies. Tax implications can significantly impact the overall returns on investments. This section will provide readers with a detailed understanding of the tax implications associated with various investment vehicles. It will also shed light on strategic approaches to minimize tax burdens and optimize returns. Number 10. Seeking professional advice. Recognizing the right time to seek professional advice is a hallmark of a savvy investor. Financial advisors bring a wealth of knowledge and experience to the table, especially in complex scenarios. This section will guide readers on when and how to leverage the expertise of financial professionals to navigate intricate financial landscapes. And there you have it, our top 10 tips for investing wisely. Remember, financial success is a journey, not a destination. By incorporating these tips into your investment strategy, you'll be well on your way to building a secure and prosperous future. Thank you for joining us today. If you found this video helpful, don't forget to like, share, and subscribe for more valuable insights. Until next time, happy investing.